Hello and welcome. You're watching BQ Conversations and we're talking to DIPAM Secretary Mr. Tuhin Kanta Pandey. Ahead of the run-up to the budget, IDBI Bank has finished the first stage of its disinvestment process. To get to know the fine print of what we can expect, we're talking to Mr. Pandey himself. Before I begin, sir, thank you very much for joining and talking to us today.
Thank you.
So just to get a sense, now that we've said that the first stage of this process is complete, which means the EOIs, the window for that closed on the 7th of January, physical EOIs will come in by 14 Jan. What does it look like to the second stage? What are the stages involved, processes?
I think now we will have the qualification check by the transaction advisor and a fit and proper check by the RBI, for which we have earlier clarified in the EOI, and we have obtained documents. The TA has obtained documents, and accordingly I think it will go for RBI for a check, following which there will be a virtual data room to which the bidders would be given access to the information, and followed by draft sharing the sharing of draft documents, definitive documents. And once everything is through, then there will be an RFP and financial bids will be invited.
So this is much, I think, say the second quarter of next year. So this is a bit of a long haul. It's going to take a while. Is it, would it be right to say maybe September, October, not before that we go to the next stage?
I think we should be in a position to invite bids by within the second half of the next FY.
All right. Sir, could you give us a sense on the bidders? I understand names and specifics cannot be given. I'm just trying to understand maybe the mix. Is it more of a foreign mix, or do we have domestic interested parties, and what kind are they, banking, non-banking?
They're both domestic and foreign, I can say that.
Okay. I want to come maybe to the process before getting to this EOI stage, beginning with the roadshows. Since this is the first banking transaction happening through the open bidding process, what were some of the reservations that you had encountered in the roadshow process, and how were they addressed?
I think one of the important thing in this is a competitive bidding process. So therefore, I think what was really sought during the road shows is a clarity on who can come in, who cannot, and that has to be stated upfront. So apart from whatever master circular RBI has, it was required to be stated, because something RBI had certain powers to relax certain things, but we wanted to, there was a request that it be stated up front, so that they could really look at it, whether so in terms of consortium, in terms of if it is an NBFC, how it come, corporates, non-corporates, that should be clarified. So all these things, and what happens if there is a bank involved, so how the merger will take place, and so what will be the regulatory sort of oversight onto the process. These were the kind of things, because banking is a highly regulated industry and RBI is a regulator. So I think there were a lot of questions around regulation.
Coming to that subject, sir, there were reports that there was a prolonged discussion with the RBI, and like you had mentioned, for consortia, be it resident requirement leniency, there's a lot of changes that the government has afforded the interested bidders. Was this a particularly complex challenge? Based on what we're hearing in media reports, how would you assess it?
I think there is complexity.
Was there more pressure because this would be the first, banking transaction in terms of disinvestment?
Yeah, in terms of competitive bidding, where everything we need to state up front. So it's not anything bilateral, or it's not a distress situation for a bank that you are negotiating just to save the bank or something. It's a voluntary thing, and we would like the bidding process to be enabled to as large players as possible. Whereas of course there are certain concerns which had to be kept in mind, like corporates, for example, are not allowed, because that's the general rule we have, and corporate NBFCs also weren't. So there were certain class of people which are not permitted in banking industry as per regulations as on date. So keeping in mind whatever best could be done, that was done, including also the structure, that how much of the LIC and government, how much of the structure would be the right structure in terms of percentage of shareholding that we will divest in the first place, because it has a direct relationship with the deal size.
Right. So coming to also one of the points that you had mentioned in terms of a lot of regulatory leniency and sort of a lot of thought and work has been put into this. When we come to say the minimum shareholding, agreement for whoever will be the new prospective or owner for IDBI, when can we expect this to come? Would it be before the financial bids? The intimation from the government on how much they can have.
Yes, I think while we are in the due diligence process, we would get a better clarity, and accordingly, I think we will have that clarified. Yes.
All right. So you had mentioned about how there's that particular stake of how much the government should have, how much how much LIC should retain. This was there. Now, if we look at it, say the government has decided that 30% would be up for sale. Similarly, LIC also. So there's still a balance of about 34% LIC and government combined. What is in terms of the intention to completely exit? Is that an FY24 concern or an FY25 concern? Like right now, what is the sense?
Post disinvestment, of course, eventually we would be exiting, taking our upside. And even immediately to post disinvestment, government will be public, classified as public, which on our application SEBI has agreed. And that gives us a clear sense that actually we are not there to manage things. And same is with the LIC.
Okay.
So
LIC would hand over management control and not be a promoter as such?
Yes, that's true.
Okay. Sir, also, while we're in trying to understand this in the global context, the market sentiment is that there's an impending recession, global growth is going to be slowed down. At this particular juncture, is it the right time for foreign investors to, sell IDBI to foreign investors? That sort of concern, has that been on your mind, sir?
So it depends upon the transaction, and investments, keep coming. India is of course the bright spot, and we continue to receive investments and FDI, and of course, FIIs, they have their own ways. I mean, they can come in, exit, and de-enter, and they fluctuate depending upon them. But overall, investments into India will be, I think, will continue there. We will be one of the fastest growing economy, not only this year but for next few years. And I believe that this transaction also offers a window of opportunity.
So there is no concern in terms of the foreign investors coming in, because most advanced economies were likely to head into a recession. So there's no concern on that, is the sense.
I mean, in the sense that we have received the initial bid, so
right.
Now that this is an academic question.
Yeah. Sir, also on the subject, while we're talking about, LIC, if you look at valuation now, IDBI's valuation is about the same as when LIC invested in 2019. So what would you say LIC has gained from this, from an academic point of view, if we look at it, because it's about still the same?
Well, I think that's a question better addressed to LIC, but the fact remains that you may encounter a problem in businesses. But then those businesses you have to deal with those problems. And I can say that IDBI Bank has come out of its problems, and would at one time, it was under a prompt corrective framework. This was a PCA framework of RBI. It could not lend. It has restructured its balance sheet, cleaned up the things, and net NPA in a far better situation. It's a very good CASA ratio. It has got a very good now mix between the retail and the corporate banks. So IDBI Bank has worked hard, and so have, I think, the LIC and the government along with it, to get through the problems which we faced. And now it's only appropriate that we, in tandem with the India's growth story, we also, relatively unshackle IDBI Bank and bring in the other capital opportunities and opportunities to manage to private players.
I think the term here, unshackle, is very interesting because it's also a fact that the divestment of IDBI has been a long time coming, right? We've borrowing from the earlier conversation, it's been over a decade or so, 2 decades, IDBI will be privatized. So, what are the lessons from this process that could inform the disinvestment of banks going forward? In the budget also, there was a mention of 2 more PSUs being privatized. What are some of the lessons we've learned through this process?
The lessons we are learning and in terms of, how to do a banking transaction. But as regards the others, well, that is, I think you better address that question to Department of Financial Services at this stage, because I think that requires a legislation and other things. So that's not with DIPAM as yet. The issue is that in general, I can say that the privatization does indeed should be taken as a reform where, the employment and growth potential of the enterprise is the supreme thing in mind. In the process, of course, we might raise resources for the government, which are then reinvested into economy, in social sector, in capex, in infrastructure building, with farmers, with Jal Jeevan Mission, or several of those great schemes that we have. But apart from those resource raising exercise, it also unshackles, as I said, that in terms of government's constraints of running businesses, in particularly in a very very dynamic situation, when you have to really be alive to technological changes, the industrial 4.0 and other things which are coming, the new opportunities that may arise. It requires a certain amount of nimble decision making, capital formation, infusion of best practices, technologies, which I think the private capital is in a relatively better position to bring. And particularly now in the state of economy that India has, we have fair amount of capital, and government of course has plenty of other things to do to both accelerate the economy and ease of doing business, and also do a lot of spending on the social sector.
Right. Stepping away from maybe the banking transactions now, I want to ask about Concord. The expectation was that maybe EOIs would be invited for Concord in later in January. Is that timeline still viable, sir? Can we expect it in maybe January, or would it be a little later in the year?
We were trying hard for it.
Okay. And while we look at the pipeline for this year, be it BEMIL or SCI, even PDIL and HLL, it has gone beyond the first stage. EOIs have been received, multiple EOIs have been received, and they're either in the due diligence phase or in the demerger phase with respect to BEMIL and SCI. So does next year look like a year of consolidation and completion in terms of the ongoing transactions? Would that be the mainstay in the coming fiscal?
We do hope that the transactions that are ongoing, they go to a logical culmination. I mean, that's our fond hope, and we are working hard for it.
Okay. Would there be any new ones in terms of maybe Hindustan Zinc or something that would be started, or will the focus remain on completing the ones in the pipeline so far?
Hindustan Zinc itself is in our radar. We have mentioned it, and that is something which is a stake sale and not really a strategic disinvestment.
Okay. And in terms of offers for sale, we saw IRCTC and we saw ONGC. So for the rest of this year, about a quarter left, can we expect more OFSs to come forward, sir?
See, in general, our policy has been to come sparingly and not to have repeated things for the companies, in repeated OFS in a single company, have a share supply in tandem with in sync with the interest of minority shareholders. Of course, we do raise resources wherever the opportunities do exist, consistent with the market conditions.
Okay, sir. My last two questions are about the concepts, really. In our last conversation, it was very interesting. You told us about how dividends must also be considered, when we come to disinvestment receipts. And if we look at the trend this time, we've also seen that dividend receipts have been more in this particular fiscal year than the disinvestment receipts. How should one look at this concept, sir? And should we start seeing dividends also in terms with as the disinvestment receipts?
No, the disinvestment receipts are miscellaneous capital receipts by the accounting terms, because you're basically getting out of the capital. The dividend receipts are non-tax revenue in accounting terms, because they are the revenue item. They're repeatedly, because you are not parting with your shares, but you earn an income on those shares. So to that extent, they are accounting terms, they are distinct. But they also act contra, that if you actually disinvest, then you also forego the future dividend streams. So to that extent, there is a sacrifice involved also in terms of disinvestment. But then upfront payment through disinvestments also helps in bringing about all those expenditures that I talked about. And besides, if it is a privatization, then it is a passing of management control. To sum up, both disinvestments and dividend are important in their own rights, and both contribute to the resources. They have a different purpose, but nevertheless, they are as in our bouquet as a resources to be raised. Both together, so far we have done about 67,000 crore already, both put together.
Right. So perhaps maybe a change of lens in terms of when we say disinvestment, not just looking at receipts, but also looking at dividends, because it's two sides at the same time. That's the sense we're getting. And would that be a correct assumption?
Yes. I mean, what we're saying is that the narrative-wise, you should look at it both rather than overly concentrating only on disinvestment. Resources are resources.
Right. Finally, sir, in terms of, if you look at the last year that has been, we have noticed that, as maybe due to uncertainties when FPI has pulled out, retail investors stepped in, and retail investors sort of have held on this year. So what is your outlook for the next year and the disinvestment climate in the next fiscal, as we are going to look at various transactions coming to a close? What is your outlook so far in terms of market interest?
I think whatever we have, whatever Honorable Finance Minister will announce, we will carry forward that target.
Very diplomatic, sir. All right. I think that's about it, sir. Thank you so much for talking to us. As always, a lot of learnings.
Thank you.